Oil-producing countries, including Saudi Arabia and Russia, have agreed to cut oil production by 2 million barrels a day.
The objective behind the cuts is clear. OPEC Plus wants the prices to rise. And there is one superpower that is going to feel the pinch more than the rest.
President Biden says there will be consequences for Saudi Arabia.
Chairman of the Senate Foreign Relations Committee vows to block all future weapons sales to Saudi Arabia.
The White House says a decision by OPEC Plus to cut oil production is a clear sign the group is aligning with Russia.
Hi everybody, on 5th of October 2022, the Organization of the Petroleum Exporting Countries and its allies, including Russia, agreed to cut their production of oil by 2 million barrels a day. This is so much oil that it accounts for 2% of the entire world's oil supply. And this can have some severe consequences on economies all across the world, including the US, UK and India. Now, considering the fact that both US and UK are already at the brink of a recession, this oil spike could escalate their situation to another disaster. Which is why, in response, the United States is passing something called the NOPEC bill, and the UK government is deploying something called the price cap strategy. So in short, Russia, the Middle East and the West are now engaged in an oil war that could decide the fate of the world economy in 2023. So the question is, what exactly is OPEC and why are they cutting down oil production? What is this NOPEC bill all about? What is UK's price cap strategy? And most importantly, how will this oil war affect India and the world in the next 1 year? This video is brought to you by Golden Pie, but more on this at the end of the video. To start from the basics, OPEC is the acronym for Organization of Petroleum Exporting Countries. And this group consists of oil-producing countries like Iran, Iraq, Kuwait, Saudi Arabia, Qatar, UAE and 10 other countries. On top of that, they were also joined by Russia and other countries in 2016, and eventually they together formed the OPEC Plus group. And now, together, this group accounts for more than 50% of all oil exports in the world. Now the question is, why is this OPEC Plus planning to cut oil production and how does it help them? Very simple. They are causing something called the supply-demand mismatch. For example, let's say there is a demand for 200 barrels of oil. So if there are 4 oil countries, they will sell at $30 per barrel and each of them would produce 50 barrels of oil. So each country was getting a revenue of $1,500. And now, if one of these countries purposefully decreases the supply from $50 to $10, what will happen? Although the demand is still 200 barrels, the supply is only 160 barrels. So now, even though the other 3 countries could supply more oil and make up for the shortage, they will not do so. Why? Because now they can sell oil at $60 per barrel. Which means what? They will sell the same 50 barrels, but now they will get a revenue of $3,000. Which means more profit in spite of giving out the same quantity of oil. Similarly, if all the countries decrease the supply by 10 barrels, they can again increase the price to $70 per barrel. Eventually, they could make $2,800 each in spite of supplying less oil. This is the reason why every time the OPEC increases or decreases oil production, it causes a ripple effect all across the world.
OPEC, the Organization of Petroleum Exporting Countries, has announced it will cut back production by 2 million barrels a day.
We're setting the table here for a monster cut of 2 million barrels a day.
The oil cartel led by Saudi Arabia announced a cut of 2 million barrels per day.
Oil jumped this morning as OPEC Plus mulls a cut in production.
This will be the first major OPEC Plus cut since 2020 when oil prices went negative.
President Biden says there will be consequences for Saudi Arabia after the kingdom sided with other oil-producing countries to significantly cut production.
Now, to understand the situation in 2022, let's take a look at this chart. This is the international benchmark for measuring oil prices. At the start of 2022, Brent prices were close to $79 per barrel. Then suddenly, after the Russian invasion of Ukraine, it suddenly increased to $110 per barrel. This was the highest mark in the past 14 years. Why? Because Russia is the 3rd largest oil producer in the world. So when sanctions are applied against Russia, it led to decrease in supply and increase in demand. So for the next few months till June, July, it continued to remain above $100. This is what caused a ripple effect of inflation all across the world. Why? Because when the oil price increases, it increases the energy bill of the factories, that increases the cost of production and transport, eventually causing the commodity prices to increase. This is how oil prices and production affect common people like you and me. If this is very clear to you, let's get back to the oil prices. If you look at this graph, since July, we started seeing a general reduction in the price of oil, and by the end of September, prices had fallen to $85 per barrel, which was the same as the price before Russia-Ukraine war. And this is where most of the people thought the situation had become normal. But the catch over here is that in 2021 itself, we saw a significant increase in prices because the world economy was bouncing back. So $85 per barrel was not normal costing, it was already a steep increase from the pre-pandemic levels. In fact, immediately after the pandemic, the oil price shot up from close to $20 per barrel to $85 per barrel. And then, after the war, it spiked to $110 per barrel. So from the perspective of the oil producers, the $85 per barrel in 2021 was great because it was a big increase on the previous COVID months. But right now, the prices are declining from what it was during the war. So now, oil producers are concerned that if this decline continues and then the world goes into a global recession as expected, just like oil prices dropped to $20 per barrel during the COVID, when recession arrives in 2023 again, the demand for oil will go down and they will again have to sell oil at a dirt cheap price of $20 to $30 per barrel. This is the reason why now OPEC Plus has cut their production by 2%, and just as expected, immediately after the announcement, the price of oil rose from 1.7%, going from $91 to $93 per barrel. This is how the OPEC Plus group uses its oil monopoly to dominate the global economy. And this is where the United States has a problem for three discrete reasons. First of all, the situation in Europe is getting worse, and like we saw in the previous episodes, if their energy bills go higher, the government needs to borrow more money, which means more bonds will be issued in the market, which means less demand for the bonds, leading to higher interest rate of bonds. And this eventually kicks in investor pessimism, eventually reducing the value of the currency, which again increases the energy bills. But this time, it's not just because of Russia, not just because of currency depreciation, but also because OPEC Plus has reduced the oil supply, which is now increasing prices. Secondly, for the US, there is already a cost of living crisis with its inflation already touching 8.3%. And if you see, it is the highest inflation rate in the past 40 years. So if you see what's happening, oil price going up is a major factor that causes recession, and the OPEC is worried that recession might come, so they are increasing oil prices, which again increases the probability of recession. And thirdly, when the oil price shoots up, Russia makes more money, which gives it more resources to fight the war. And this is the reason why again the US has a problem. Now, if you remember from our Russia-Europe episode, because of these price hikes, Russia actually made more money after the war than it did before war. And if you look at the revenue of Russia from Europe from oil and gas, you will see that the average during normal years from March to July was close to $50 billion. But in 2022, this revenue has almost doubled to more than $90 billion. This is the reason why the US has decided to go ahead with something called the NOPEC bill, which says that the United States could take the OPEC to court and punish them for weaponizing energy.
President Biden is warning that Saudi Arabia will face consequences after OPEC last week announced a major cut in oil production.
I'm not going to get into what I'd consider and what I have in mind, but there will be consequences.
White House officials say higher oil prices will help Russia, an OPEC member country, finance its war in Ukraine. And the president indicated Congress will take action when it's back in session.
Now the question over here is, first of all, the Saudi king, leaders of UAE and Putin are not like normal citizens, isn't it? It's not like you can jail them if they don't follow the court orders. So the question is, what is the leverage that the US has and what is the use of this bill? Well, funnily as it turns out, this is not the first time the US is trying to bring this bill. And every time they literally got this bill to the table, they got blackmailed by the Saudis. Yes, you heard that right. This is where you have to understand the extraordinary leverage that Saudi Arabia has on the United States and the world itself. First of all, Saudi Arabia is the biggest importer of US weapons, and as you can see from this graph, they buy more weapons from the US than the next 4 buyers combined. So although Saudi Arabia can afford to boycott US and buy weapons from Russia, the US cannot afford to boycott OPEC Plus and buy oil from elsewhere. So if Saudis stop buying US weapons, the weapon companies will cut funding to the political parties and then they will lose power. Secondly, if you remember from our dollar superpower episode, why is the US dollar a reserve currency? Because in 1945, Franklin Roosevelt and the Saudi king made a deal whereby the Saudis agreed to sell oil exclusively in dollars, and in exchange, the US will sell weapons and protect the Saudis from external threat. This is the reason why countries all across the world have US dollar reserves in US banks, which then gets invested in US bonds. And the total amount of assets in these bonds is worth $7 trillion, which means the United States gets $7 trillion in debt simply because the Saudis and other OPEC countries buy oil in dollars. So moral of the story is, if the Saudis start selling oil in ruble, what will happen? Trillions of dollars worth of bonds in the US will be sold, and all this money will get invested in Russian banks. And this would mean a complete shift in power. This is the reason why every time US brings this bill to the table, they get blackmailed by the Saudis. And this brings the question, if the US couldn't pass this bill for the past 20 years, what is so special this time? Well, this is where we have some discrete pointers that seem to be different this time. First of all, it's not just the US this time, but also the entire Europe that wants to bring down oil prices. And if you look at Saudi's weapon import, you will see that most of the weapons actually come from US and Europe. So this time, the entire US-UK group could threaten to stop supplying weapons to Saudi Arabia. And considering how messed up Middle East is, it could lead to a disaster for the Saudis. Also, Saudi has a very small army of just 127,000 troops. So if the US evacuates its own troops along with the weapon supply cuts, it's good enough to make the Saudi vulnerable. Now, apart from the US, even the European Union has deployed a strategy to circumvent the rising oil prices, and they are calling it the price cap strategy. And this strategy will now be applied for Russian oil, and in adverse condition, it could even extend to the Middle East. So the question is, what is the price cap strategy and how will it help Europe control oil prices? Well, you see, as long as oil is sold to Europe, all the European countries can actually form a cartel, and they could agree together to buy oil only at $60 per barrel and not a penny extra. But when Russian oil is being sold to a country like India, when Europeans are not involved in this entire negotiation at all, how can they control these prices? Well, let's try to understand this using an example. Previously, if ships carrying Russian oil wanted to escape the sanctions, or if they wanted to trade with India without putting India on the spotlight, they would just take a layover at China and declare the oil to be Chinese. And since oil is oil, it was very difficult for the authorities to verify. And regardless of the geopolitical situations, the shipping companies did not give a damn about international tensions as long as they made money. This is the reason why recently there was even news that China was selling Russian oil to Europe. And this is where the European Union brought in their insurance superpower. For those who don't know, insurance in the shipping industry is extremely important because the value of a ship itself could be as high as 600 to 1000 crores, and the cargo would be another few hundred crores. So in total, the value of the ship while traveling is a crazy 1000 to 1200 crores or 125 to 150 million dollars. So even though the shipping companies may not care about sanctions, for them, insurance is very, very critical. Because one bad oil spill, one ship damaged could put an entire shipping company out of business. And the fun fact is that an international group of 13 marine insurance groups cover approximately 90% of the entire world's oil shipping fleet. And this group is based in London. So now the EU has applied sanctions and measures against the insurance companies, whereby they are forcing them to not give insurance to ships who are buying Russian oil above the price cap. And this is how it will work out. Let's say Wilson is an Indian buyer of oil from Russia. Then he will have to buy insurance for his ship. For this, he will have to present a lot of paperwork wherein he will have to disclose at what price he's buying oil from Russia. And if he has bought oil at $60 but the price cap decided by the West happens to be $50, then he will not be provided with insurance. So you see, even though the European government is not involved between Russia and India, the European insurance companies will deny insurance to shipping companies, because of which they will by default have to abide by the price cap. This is how serious Europe and US are about oil prices. So if the Saudis deliberately manipulate the oil prices, if the situation in Europe during winter goes out of control, they will not hesitate to go all in and apply these same price caps on the OPEC plus countries. This is the story of the oil wars between the Middle East, Russia and the Western powers. And this brings me to the last part of the episode, which is about how will this oil war affect India. But before we move on, I want to thank our partners of this episode, and that is Golden Pie. People, all the stock market investors, after enjoying their bull run, are now starting to face the brunt of the fall. Inflation has crossed 6%, and banks are eating away your wealth with low returns from fixed deposits, which barely give out 5 to 6% returns. So during uncertain times like these, you need to play it smart, and you need to diversify your portfolio into fixed income instruments like bond, so that even if the stock market goes down tomorrow, your portfolio can provide you with stable returns even during recession. Bonds can give you a fixed return of up to 11%, and as the interest payout happens in regular basis in monthly and quarterly formats, investing in bonds will give you additional stable cash flow. Previously, only the HNIs had the privilege to invest in such high quality bonds. But now, GoldenPie is making these bonds accessible to retail investors through user-friendly platforms. GoldenPie is backed by Zerodha and partnered with Axis Direct, IIFL Securities, Bajaj Financial Securities Limited, 5paisa and many other leading brokers, and acts as a transparent marketplace with the largest range of bonds of all reputed institutions. And this includes NBFCs, banks, PSUs, corporates, etc. The good news is that you don't need lakhs to invest in bonds and debentures, and with GoldenPie, you can start with just 10,000 rupees in case of NCD IPOs. And currently, the Edelweiss Financial Services and Muthoot Finance IPOs are live. So if this sounds useful to you, check them out from the special link in the description. Moving on, the first possibility is that OPEC Plus will continue to decrease oil production, which will increase oil prices and cause recession both in US and UK. So all our trade and services from India to the West will be affected. Secondly, with the increasing oil prices, our deficit is now touching dangerous levels and our currency is depreciating. So after a certain point, it could be a disaster for India. And lastly, if the US and UK succeed in controlling the Middle East and Russia and they cap the prices of oil, we will actually benefit because we will get oil at cheaper prices. And the best part is that we will actually have the diplomacy maintained with Russia, because now it's not we who's actually bringing down the prices, it's actually the European insurance companies that are bringing down the prices. So the blame will not be on us. So now all we can hope for is that amidst this oil war, we don't get affected and our currency and our economy remains steady. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye bye.